Thanks for joining us once again. Today we focus on the Tesla short squeeze that's going on and what could we expect over the next few days, few months. This is Greg for Teslafaninsight. Thanks once again for joining us. If this is your first time, welcome. If you're a repeat visitor, welcome back. We also want to thank our Patreon supporters. If you'd like some better ideas on investing and trading, please join us on Patreon. So today is a very interesting day. It is now about 6 a.m. New York time, and Tesla's stock price, it closed at 284, it's now at 291 pre-market and on the rise, even though the market is slightly down. So the question is, what is going on here? Our show is split into sort of two halves. The first half is what is going on currently and why, about 4 minutes. And the second half at about 5 minutes is what do we expect to happen over the next several days? So I have to say that, wow, up 25 bucks on Friday and then up further. So there's something that I want to call an informational disadvantage. Let me give you an example. So there's a place called Texas, there's a place called Germany, there's a place called Fremont Factory for Tesla. There was an analyst that explained the process that well-paid analysts will do. And the answer is they will actually go to Silicon Valley, go to Texas, go to Germany, and they'll have drinks after work with Tesla employees to find out, well, what's going on in there? And then this is one of several sort of building blocks of information that they use to actually give reports to the investors that paid for that research to explain what they think is going on and therefore what to expect from Tesla. So one of the things that's going on is Tesla's throwing off confusing data right now. The biggest example is just go through the numbers. 13% down in terms of sales of vehicles, 71% down in terms of earnings, 20% down in terms of revenue. All of those are, as you can see, not good numbers, all negative. What happens when you throw those numbers into a spreadsheet? It just shows red everywhere, and the modeling that people do on those stocks, particularly for Tesla, looks rather ugly. So as a result, the number of downgrades is across the board for Tesla, and everything is saying the company is doing badly and will do badly going forward. Let's add into that. I've looked at least 10, pop-ups of screens regarding Tesla, basically saying that Elon is screwed. And yeah, I think Elon has done some damage, and he's admitted that. But there's a little bitty problem with this plan of Elon is screwed, and that problem is that when you're the number one selling vehicle in Europe, you're selling well in the United States still, and you're selling well in China. That can make it a very confusing thing because your data points are confusing, and therefore you can have a large group going in the negative direction and a large group going in the positive direction. So what I'm arguing here is, and I would agree with the folks that have said, look at what's going on with options. The best informed people are using options. And I spent some time with one of our investor buddies yesterday, and he was saying there are people making $1 million a day on options in Tesla. So the answer that the market is giving off is that the hedge fund people who are the best informed, they're buying the stock like crazy, or their options and making a killing. Yes, we're in a short squeeze zone, so in theory, a short squeeze for Tesla is usually a 50 to 75 point issue, and then the stock starts ticking back down again. So in theory, we're about 80% of the way there for the next, let's say, week of what might happen to Tesla. The number one thing that's going on right now is that there's a problem. So, bottom line, Tesla stock price is up, but everybody has downgraded them. So, how do you deal with that if you're an investor? Because those are two different directions. So, the answer I'm coming up with is that um, there's a lot of really positive data that's not reflected in the numbers. The biggest one for me is the fact that I'm still in a head scratching mode right now because there's this thing that's been going on with Tesla where beneath the skin of the car, the vehicle changes about 25% a quarter. So Tesla has constant R&D going and the cars are being consistently upgraded. Now, the skin has changed as well in the case of the Model Y, and it likely will change for the Model 3 as well. And so this is, for me, this head scratcher here is, this is the first time in the last 15 years that Tesla has gone ahead and, and done a skin change within 4 years of the production of the vehicle. So think about it. The Model S has been around, the basic skin has been around since 2010. And, you know, so what I want to argue here is that it could be said that Tesla is doing worse, but I see moves that good companies do, which is a comprehensive redo of a vehicle, can result in a better product being delivered and the customers deciding to buy those products in large numbers. So, bottom line of what I'm seeing is that there are some good numbers being generated in sales by Tesla buyers, even though there are protests by other folks and other issues going on. So as a result, we have, you know, the core fundamentals of why Tesla was successful, charging network, better software, you know, et cetera. All that stuff is still in place. It's just Elon's activities that are slowing down the movement north of the stock and company. So I bring all this up today because I think there's still another 20 or 30 points available in the short squeeze. And then after that short squeeze, I think there are a large number of institutions that are going to be forced to buy in. And this is why I suggested Tesla was going over 300 when we did our show 4 or 5 days ago. But next step in my mind is that we start threatening 400 a share if the institutions like the fundamentals enough. That's a possibility. A more likely scenario in the next 30 days, I think, is that it rises another 20 or 30 points before giving back some of those gains as your short squeeze ends. But after that short squeeze, I think there are a lot of buyers out there that are acknowledging the fact that the competitors haven't gotten their act together, and therefore Tesla can continue to take market share. The other thing that's weird to me is that I'm not saying I'm a fan of the Cybertruck, but I was really stunned by the enthusiasm for the Cybertruck in frigid Northern European countries. The vehicle kind of doesn't fit America in many ways because in dense cities, there's not enough parking spaces for those things. So I can go through a long list of why it doesn't work. But there are places where they're eagerly awaiting the arrival and sale of those vehicles once they fix this falling off the vehicle part issue. So overall, I'd have to say congratulations to the folks that own Tesla stock that have hung in there. I definitely think we're going over 300, 291 right now makes it clear that that's available. But now we're entering the zone where large institutions are going to have their opportunities to buy. And I really, really think that if you dig through the numbers, you'll find that Tesla, relative to its growth rate, is the cheapest FANG stock out there. So this is also an issue. You're running out of where you can buy for reliable growth, and I think Tesla's it. So good luck those of you who've made some money. Let's make some more, and we look forward to updates going forward. Just a note for the health tips, don't forget your 25 leg lifts a day, as well as your 20-minute walk on a daily basis to ensure that we're doing a good job when it comes to every aspect of body health. Once again, thanks for joining us. Please take time to like and subscribe. Tschüss, au revoir, la hit road, hod hafez. Try to ni hao ma. In Jamaica, we say enough respect, walk good. Thanks for joining us. Have a great day, and bye for now.